Morning all, how are we doing? Happy 1st of July, new month, reset, all good. Like new months. If you've had a bad month, you can put the month behind you. If you had a good month, you can go, well, last month was awesome. It's always good to start a new month. It's 4th of July weekend as well, so light markets on Monday, just be aware of that. Right. Just kind of a quick overview of where we are at the moment and what happened last night. We've had quite a lot of volatility during the Asian session, some big moves overnight. Yen pairs, New Zealand pairs, Aussie pairs, all gone quite volatile. You can see obviously the ADRs have been hit. We're up to 150 on New Zealand dollar yen. New Zealand dollar yen was the most volatile along the Aussie because the Aussie and the yen moved differently. So morning Jesse. So yeah, big moves. And morning Diamond. There's a lot of potential opportunities. So I woke up and saw all this morning. Had a quick check on the news as to see what has caused the volatility. There was all the yen news overnight to do with rates, CPI, everything basically. There's nothing positive in here that I can see. So we're either as expected or negative on all of the main news that was released. The Bank of Japan obviously had a little press conference and did other bits and pieces. There's nothing positive here that I can glean from any of this. So that would lead me to believe, obviously, this is manipulation this morning. Unless I'm reading this all wrong, but I can't see anything positive that came out of any of that news. So all these moves we've had are quite obviously quite big volatility. We've hit ADRs on them, but a lot of it is potential opportunity to get into positions. So we'll have a look through all these in a minute. News today, we've got CPI this morning for the euro. This is the flash, which comes out 2 weeks before the final CPI figures. It's a good indicator. It's pretty much what CPI is. It's they call it a flash, but it's figures so far, so it's not going to change much in 2 weeks, is it? So this will probably be quite a big mover this morning for the Eurozone. So we might have quite a quiet open this morning and a fair bit of chopping around because they'll be sitting around waiting for this to be released. Then this afternoon we've got PMIs for US dollar. So 3 o'clock, half an hour into market open, we've got the PMIs. So be aware if you're trading indices. We're going to get some movement half an hour into the open. So we may have fairly quiet open in New York as well. Also, it's the Friday, last day ahead of the bank holiday. So a lot of people will start to unwind their positions to go flat for bank holiday. So any speculative traders holding multi-day positions will likely want to unwind those positions because they won't be around on Monday. The markets are open, but the stock markets are not open. So we will get trading with low volatility, with light liquidity rather, which means high volatility potentially. So people want to start unwinding their positions. So it could be a big day today, big afternoon. We'll have a quick look at the indices to start off with, just before we get into FX. So DAX yesterday, we had a big flush down yesterday. We had a big flush down on everything yesterday. We finished with a bit of a flurry back up, but we got the down day that I was expecting. I killed it on the way up yesterday. We put in this massive move down, and basically I rode this all the way back up yesterday afternoon. It was lovely. I put a post in the Telegram about it, but it bought every dip, bought every breakout on the way back up, and yeah, it was lovely. But it is another down day. We are down as well so far today. We're inside of yesterday's price action across the board. So It's a tricky one. Whenever you get a big move in Globex before Frankfurt opens, we've got a big move down. It makes it quite tricky to trade because you've done a lot of movement, and the market will either push back up and try and correct this movement, or it will continue down, and you just don't know where it's going to go. Whereas when we've had a quiet session, as soon as it starts moving, you tend to get a trend day. When you've had a big down day, you don't know whether you're going to go into a trend day or a range day. It just makes that decision a little bit more tricky in the mornings. So DAX, obviously, we've got a massive gap. So lovely gap fill play to the upside potentially. So I am anticipating this morning indices going up initially. So I think we'll probably get an opening range break to the high. So I've got a couple of pending orders set to try and take advantage of this morning. We didn't get yesterday's done on the DAX. So you can see, gaps sometimes get left behind, get orphaned for a couple of days. The fact that we've got a gap here and we've got a previous day gap, I get the feeling we're going to open bullish this morning. So that's my plan, is to get into some longs. So that's what I'll be watching for this morning. There's a fair amount of obviously movement available there, but bear in mind we've got the Euro news at 10. So whether or not we go into a hideous range until the news or not, we don't know. So we could keep an eye on the open this morning if you're trading the DAX or any of the indices. They will all follow suit, but obviously the DAX is the one with all the gaps at the minute. So yeah, continuing down. I'm still bearish on all the indices, but with the DAX at the moment, sort of temporary bullish. I don't think they'll get that gap done in one day. Might do. You never know. 150 ADR. It's not off the cards, is it? We also got that wacky gap up there as well, which has got left behind basically because all the bad news came in. So yeah, that's where we are at the moment. On the indices. US dollar Swiss. Yen pairs and Asian pairs obviously have all moved massively. Market's just opened. Bearish moves coming in to start. So we'll see where that goes. I'll keep an eye on the DAX. Just see if we get any big volatility coming in. See what the opening range is like. So potential here to watch for a flush of the lows. Take that pre-market liquidity and then pop back up and break out the highs. See if we get that break. Okay, so we pop through there. I was just going to say on no volume. Now we've got volume coming in. So high volume, all absorbed by the buyers there. So all that big flurry of sell orders all got absorbed. So we'll see if they have another run up at the lows. If we get a load of selling into these lows and we don't actually make progress through these lows, and we pull back up into there, I would suspect we're probably going to get that break up. But we'll see if they hold this low. We've got yesterday's low as well coming up. So there's two key levels here. This could be interesting. Decent selling coming in at the minute. Okay, approaching yesterday's low now. See if we can get down there. We'll find a load of limit orders, buy stops sitting down here. If we get there. Okay, got a couple of minutes left on that candle. Just keep an eye on that. So covering these, so obviously we got loads and loads of ADRs to look at. So basically it's all the Aussie pairs, all the New Zealand pairs, and pretty much all the yen pairs. So we'll whiz through these. We'll come back to that in a second. Aussie dollar CAD. ADR low here. So I'm looking basically through these. I'm looking for biases that are in line with, sort of what I think is going to be happening long term. So Aussie dollar is a short, CAD is a long. So we'd be looking for Aussie dollar CAD shorts. It's obviously tanked, so not really interested in long in that. All of these ADR hits, you've got potentially two things going to happen. We're either going to hit them and accumulate and then push down for a little bit more, or we tend to get that V-shaped recovery bounce coming in, or we just go into an accumulation and stay there. Obviously, with anything that is an Australasian pair against an Australasian pair like the Aussie yen, the likelihood is you will get into a bit of an accumulation because there's a lot less volatility and a lot less money coming into the market for these. But anything that's crossed with a UK pair like the pound and euro, a European pair like the pound and the euro, or a US pair like obviously CAD or the US dollar, those are going to get manipulated a lot more in the London and the New York sessions. So you tend to get a lot more V-shaped recoveries and bigger moves on those pairs. So just bear that in mind. If you're going to be getting into something like Aussie dollar yen, you're not going to get a massive amount of movement. Here comes the balls. Aussie dollar CAD, not really that interested in. Aussie dollar Swiss, again, this one's pushed down even more. We know the Swiss franc is strong, and now the Aussie dollar's put in a massive weak move. Another leg down. So again, why I'm not trading the Swissy at the minute, Aussie weakness coupled with Swiss franc strength, this thing's just tanking. So I don't want to get in front of that. Aussie dollar yen, I am in. So I got into this one yesterday. I accidentally got into two positions. I didn't think about this. I entered a manual position on this one yesterday as a first entry, looking for that break to the upside. So I stuck the EA on there, and obviously the EA took a reversal alert as well. So I got into two positions on this one accidentally. So what I've had to do is increase the lot size on it, because I've got in a little bit too large, so I'm getting in at pretty much the same size. So I've taken second entry on that one this morning. I quite like the look of this for a V-shaped recovery. I'm not sure it's going to play out necessarily today, but as I said, all this movement, we've had big strong movement on yen pairs, but we've had a lot of weakness on the Aussie and the New Zealand, and there's no real reason for this. So I'm looking basically for a recovery on this, and fairly quickly. So taking a second position on that one, and then obviously we'll look for pushes to the upside on it. So it's broken down out the symmetrical triangle that I had drawn completely the wrong way, but as I said, I don't necessarily think this is a fundamental move in this direction. I think this is more manipulation, and there's a lot of liquidity sitting underneath this low. Everybody that got in there, everybody that got in on that double bottom bounce from here, or triple bottom bounce from here, basically, is going to have a lot of liquidity sitting under those lows. So I'm looking for this to get swept and then for them to just recover this. That's the play anyway. We'll see if that happens. New Zealand dollar yen will be very, very similar to this one. Obviously, there is the opportunity for this just to be a third tap on this low and break out to the downside, which is another possibility. So I'm just going to just want to go long. On this, on the indices, just because I think the DAX may be doing its little gap fill. We didn't quite get down to yesterday's low, but we have just swept those lows. So looking for a break to the upside, up to there. So yeah, Aussie dollar yen, I'm in long on that one. And just basically, yeah, looking for a complete retracement on that one. Aussie dollar US, I'm bearish on this one, so it doesn't kind of tie in with me. I wanted to look for a short. I was waiting for a pullback on it, and obviously the Aussie's just gone. So looking for some US dollar strength to power that one up. Yeah, we've got PMIs this afternoon, so there's a potential for that to happen this afternoon with the US dollar. But we've got that breakdown. So we'll see if this Aussie dollar weakness holds. CAD yen longs. So I've just got into second position on this one. So nice push on this. If we quickly whiz through all the yens, you can see all the yens basically have powered up, basically, off the back of that news. That news was not positive. So this is why I'm thinking this is probably manipulation, and we're actually doing that, but the market wants us to think we're going the other way. So everyone's going to jump in short, put their stops at the highs, and they're going to come and rip those highs out. So CAD yen, good opportunity. Already in one from yesterday. Second position, just taken this morning. Euro odd. Off to the highs. The Euro's got the potential to push higher. We haven't quite got to 125 ADR on this, but we've got these highs here. So this is basically done a 50% pullback straight into the 24, and we got that bounce. So with potential interest rate rise, well, definite interest rate rises coming this month, we will see some strength probably start to come into the euro. And we will probably see the market start to shift its bias long on the euro. So it wouldn't surprise me if we see this starting to grind up. It has been starting to grind up already, the euro. So there's money starting to come into it. This Australian dollar move, though, obviously, I suspect is temporary weakness. There's no real reason for this, I don't think. A pullback on this one and then potentially a long. So I don't really want to take a short on this one from up here. I'd rather wait for a pullback, and I'd probably want to trade another euro pair, to be honest, rather than euro odd. But if you want to take a ADR reversal on this one, obviously M5, we are tapping into a double top. We have tapped into it to the pip, which I suspect will do it again. So this hit into the pip very rarely works. What they want to do is sweep the highs and take that liquidity. So they'll probably push up maybe into 125, 150 ADR today. That's where I'd be looking for a reversal up there somewhere, if you want to take that one short. Jesse, what made you take the third buy on 0.24 lots on Aussie yen? Basically, I got into two positions by accident. So I took a manual position on this yesterday, and then I put the EA on. The EA took another position, too close together. So instead of me getting in at 0.18, which is my normal risk on Aussie yen, I got in at excuse me, 0.36. So I needed to up my lot size, because if I get in with a 0.18 down here, my average is going to be somewhere up there. So I need to get in with slightly larger lots. To keep the average within ADR, basically. Euro New Zealand is the same as Euro odd, but they have taken out the highs. So that one's already started to play off the highs. But yeah, be careful, because obviously if they push the euro up, probably get Euro New Zealand going up as well. So Euro odd and Euro New Zealand tend to move in tandem. Pound odd. This is an interesting one. I'm liking shorts on this one. This is that area. As you can see, I got into shorts on this last week. The pound shouldn't be strong. We know the pound isn't strong, particularly at the moment. And this obviously Australian dollar weakness, I don't think is going to be... sorry, not the size, not reason for the entry on the Aussie yen. Was for this symmetrical triangle break. So the reason for entry on this here was I was looking for symmetrical triangle break to the upside. We were contracting and contracting and contracting and contracting, and we were about to explode. We exploded the wrong way. So the market will be thinking. You got to think like a bank. Everybody's looking for longs at the moment against the yen. Yeah. So it's in their interest to come down as hard, as fast as possible to take out everybody's money, because everybody for the last 2 weeks has been sitting here waiting for the yen to get weaker, because that's what it's doing. So everybody's positioned long. Everybody that's positioned long, with wherever they've got a stop, doesn't matter. If they've got a stop there, or there, doesn't matter. Or if their stop's under there, wherever it is, let's just take the whole lot, make sure we got it before we go. I'm positioned the same as most retail that is following fundamentals, looking for longs. It's not an ADR reversal. Today it's an ADR reversal, but it's more of a stop hunt play. But this is the second position. I need another position on. I don't want to get, if this pushes down further, I'll get another position on. It's a position trade, so. Yeah, so delay. I probably already answered that question for you. Pound odd. So yeah, pound odd I quite like. We're pushing up into this zone again. So this blue box basically is that high and down there. So this area we got the reaction out of last time. Aussie US has just hit 125 ADR and Aussie CAD. More weakness on those Aussies. So looking basically for potential short on this one. Now the problem I've got is my Australian dollar exposure is already in. I can't really take any more exposure on the Aussie. You see there, I shouldn't be in this much drawdown because I've got two positions on at the same level basically. But I can't take any more Aussie on. So pound odd would be a nice looking short for a sort of resistance play somewhere up in here. This area of balance, we've got a lot of trading happened here. You can see this area, we keep rejecting this area over and over again. We do not want to push any higher than this. Every time we get there, we are finding sellers stepping in over and over and over again. We're trying it again. There's a very high probability of rejection because there's no potential strength in the pound. The Aussie move is unexpected. Weakness in the Aussie. I don't think it's a fundamental move in the Aussie. The fact that the Aussie and the New Zealand have gone at the same time, it just stinks of manipulation. So this is a good looking short. I can't take it because I'm overloaded. Well, not overloaded, I'm exposed on the Aussie. So, but good looking opportunity there. So take a short on that one. M5 reversal alert, you've just had off of 125. It's tapped straight into that zone. We're retesting right now. So if you wanted to, you can get in with a sell stop underneath that low, or you could get sell stop underneath the retest. That gives you your nice M reversal. So good looking opportunity there on that one. What have we got next? Pound odd. Just move those back over there. Market's gone pretty quiet, as I suspected. I think we might have a bit of this until 10 o'clock. But we'll see. By the way, sorry, my doctor's phoning me this morning. So if my phone rings, I'm going to have to pause, I'm afraid, because I've got an aching arm after COVID. I'm not sure if it's a trapped nerve or if it's something, an after effect of having COVID. But I've got a really achy arm and I've had it for about a week. And my left thumb is numb. You know, like pins and needly numb. So that's normally signs of a trapped nerve. But I'm just getting him to phone me just in case, because it's been over a week now I've had this thing. I've got a numb thumb. But anyway. So yeah, if the phone rings I do have to go. So apologies for that if it happens. But he's meant to be phoning me at between 9:30 and 10, but they're doctors, so they just do what they like. Pound odd. Pound yen. So again, yen, big moves. This one I probably wouldn't want to get in the way of, because we've got pound weakness. Pound is the pound yen is the weaker of the yens. So any moves to the downside, obviously, on yen strength, coupled with what we're expecting, which is pound weakness, you're going to get a much faster, harder move on this than you are on the other yen pairs. So although this is coming down very nicely, I wouldn't be looking particularly to long-term play this one, just in case this is for some reason a crazy yen move. But 175 ADR on this one today is the 72. So if we do get down to the 72 at 175 ADR, you are going to get a reaction of some description down there, I suspect. So short-term mean reversion somewhere down here with a stop, I would say. And then if it pushes up, cover it. You can either take it off, obviously, profit. That's entirely up to you. But bias on it is really like that, but it's probably going to be the slow mover one. So I would want to see it a little bit deeper, 175, maybe 150, 175, start looking to get in on that as a long. Pound New Zealand, it's already played out. This is what I mean, the pound is weak at the minute. So the New Zealand dollar weakness has started to wane, the pound is just dropping. So that one's already played out, missed it. Off of 125. New Zealand dollar CAD, but that's a good short. You could take that, I suppose. I mean, you should, yeah, M15's already played out. You're not going to get a reversal alert because of the strength of move on the hourly, so you've kind of missed that one. Yes, Pan New Zealand dollar CAD. So bias on this one is short. We've hit to the downside. Canadian dollar should continue to strengthen up, although it's a bit of a slow burn of the CAD. It's linked with oil. It's just going to be a slow burn long. So you just want to be looking for opportunities where you can get into CAD pairs long or anything short against the CAD. It's obviously this one's already playing out. Next leg down. So. Waiting for a pullback on this one so we can get in. Basically what I did there, getting short. New Zealand dollar Swiss. Don't want to get in front of the Swissy, especially when the New Zealand dollar is powering down. So not interested in long in that one. New Zealand dollar yen. Again, same thing as the Aussie dollar yen. We've got a little bit of strength on one, a little bit of weakness on the other. This is a long, but the Australasian pairs haven't stood up quite as well. A bit like the pound, they haven't stood up as well against all this yen strength. We are coming down to this bottom. Obviously, the Aussie dollar is a lot closer to sweeping these lows. And this is a support that held. So this will be a double bottom. So I suspect somewhere around 175 ADR, if we can get down to there, would be a lovely opportunity to long this one. So again, using ADR extension in line with confluence of support resistance gives you that extra confirmation. And look at M5 for reversals. You have had one, it may well hold, but this 175 level is where I would be really interested in taking a reversal. Because if it does push down and do a deeper sweep, you're down at 225 ADR. You're also going to be extended, I suspect, yeah, obviously already on the hourly, and you're probably extended on the 4 hour, which you are, below 20. Look at what happens when we get below 20. Yeah. This thing's going to pull back because this is not fundamentally strong for the yen. The news that's triggered this is not fundamentally strong for the yen. So this is not a sustained move, I don't think. So just need to try and time the entry. So you could take it now. If you want to, obviously you can do a position trade on this. So we just had a reversal out on M5, so you can take one now. Yeah, so this reversal alert is just kind of retesting. So literally right now is either going to go from here. Be looking for target of about 90 odd pips on this. So about an ADR. And if it pushes down further, you can take a second entry here, which is going to be roughly half an ADR. So pretty good spacing to get in there, half an ADR apart. And if they push down any further, you'll probably find that's enough, and then it'll spring back. Extended on the 4 hour, extended on the hourly, extended on M15. We're just coming out of extension on M15. M15 reversal alert obviously is just doing the retest now on this M5. You've kind of just missed the retest. But yeah, looking good, New Zealand dollar yen. So that's a nice looking one for longs. Again, I'm yen exposed. And it's counter my Aussie New Zealand long, so it just doesn't fit in my portfolio, but if you want to take it, do it. It's a good one. And New Zealand dollar, US dollar. So again, big strong push down. This is the move that I was expecting and waiting for, but I was expecting it to happen off of US dollar strength rather than New Zealand weakness. I was waiting for the pullback, didn't quite get it, so missed it. Wanted it to push up, back up into these highs, but we didn't get there. It's obviously gone on the Aussie move. So I'm just watching the indices. So we have broken back out of those highs. So we've got an opening range break to the high on the indices. I'm just going to take us, going to add into that position just at the top. Sorry, you can't see that, can you? Just adding in up there, just above this little cluster. If they are going for the gap fill on the DAX before the European news, the US indices are going to do the same thing. They're going to push, so going long on that. Have I done that on both accounts or not? Sorry, doing too many things at once. So yeah, so there's your ADRs. Weeklies is Friday, so anything that's hit weekly, yeah, I mean you can kind of ignore. Obviously it's the new month, so there's nothing on the monthlies. So looking at the hourlies, we've got a few hourlies there to have a look at. Obviously most of it is what we've already looked at because it's based off of the yen. So there's that gap on the DAX as well. You can see that a lot clearer on M5. So 150 ADR is where we've got to get on the DAX today to get these both these gaps done. It is possible. In a bear market, is it probable? No. But anything is possible. This is the markets, they'll do what the hell they like. But it's improbable we'll get a 150 on this. So I think going into next week, we'll be looking for some pullbacks before we drop on the next leg. But we'll see. Just bear in mind, obviously, Monday is a bank holiday. So there is going to be quite a fair bit of a manipulation possibly this afternoon with, say, people getting in and out of positions. So we could well see an ADR, a big ADR day on the indices today, but we'll see. Won't know until New York opens. Aussie dollar yen hourly, obviously extended. We've got some nice wicks going in down here. So we had a nice hammer put in, and then we've just swept the lows of that hammer. Or Deadstone Doji, really, that is. So yeah, nice wicks going in on that, potentially for a long, very nicely extended for the last 3 or 4 hours. So good potential push. We got down to below 25 level, so very nice extension. Good looking long opportunity. CAD yen, same thing. CAD yen is putting a bullish engulfing in, extended on the hourly, already in that one on position, so looking good. Nice big propulsion gap. This is a lovely propulsion gap. This is exactly the type of propulsion gap I like, as is this one here. So good lesson in propulsion gaps. The propulsion gaps you want to pay attention to are the ones that follow an accumulation. Yeah. So we've got an accumulation, and then we've got an accumulation break, which is a large candle breaking out the lows. That's the propulsion gap that I'm interested in. Accumulation, large breakout of the lows, depending where you want to draw them. Propulsion gap. Yeah. So that propulsion gap there, and that propulsion gap there are good ones. Yeah. So we've got 2 really nice targets where the market will be looking to get back to balance their books, and we will be looking for sellers to defend that area. If the buyers overpower the sellers here, we tend to get a little bit of a fight, and they break through that, we'll be looking for it to move up to there. So these are acting like magnets, because these are areas of interest where the market has proven itself to be directionally biased, and they want to come back and see whether or not that area can hold. So from a support and resistance, this is what you're looking at. These accumulation areas, if this fails, will be your kind of backstop. So this is why we struggle to get through accumulations when we come back to them. This is why support resistance works. We come back there, there's a load of people here that are saying, right, I'm short from here, I don't want you to come back up to my short, I'm going to add to my position, and hopefully all these guys that did the same as me are going to back me up. If that doesn't happen, when we get back to break even, they'll sell it again to try and add to their position, assuming that the buyers will be absolutely exhausted by the time they get there. But we'll tend to get a little bit of an accumulation. We'll go into a balance again, which is why you see accumulation, balance area, return, balance, and then breakout. And it all depends on whether there's more buyers or sellers at that particular time in the market when they get back there, as to whether you get the break to the upside or not. And then we come back and do the same thing again, over and over again, rinse and repeat. So really good targets on that one to the upside. Like the look of that. This is an example of what a propulsion gap that I don't like. Yeah. So this is an accumulation. The propulsion gap is formed without breaking that high. So this is actually part of this accumulation. This is the propulsion gap, really. We broke out the top, then we moved. That has been retested already. Yeah. So accumulation, propulsion. Propulsion gap, retested. Accumulation, 4-bar accumulation, propulsion, retested. That's not a particularly good one, although that one did get retested as well. But yeah, so good little lesson in propulsion gaps there. Thank you, KDN. Pound yen. Nice extension. Now this is obviously extended on the hourly, but it's not really biased in the way that I want it to be. I'd much rather see so I'm just watching the markets. I've just got a couple of positions in decent profit, so I'm just want to see this continue to tick green. If we can get this gap filled this morning, it's going to be a very nice $800 morning. Yeah, so sorry. This one is kind of counter trend bias for me. I'm short pound and I'm short yen. So the fact that this has moved down, we need either a really weak yen today or some kind of strength in the pound to get ourselves back up here. So this one I can kind of see doing a little bit of a flag and a drop. But it really depends on which of these does which. So it's a difficult one to trade. We've got some nice wicks forming at the moment. So it's looking good for a pullback. And I wouldn't want to be getting any more interested than yesterday's low, really. So again, looking at the propulsion gap, this one here is actually part of the accumulation. This is the break. So somewhere in here you could find we just tap drop. We may well come halfway, we may complete it, but we're going to be running. If we push up there, I think big strong drop. Now the buyers have got to undo all of that. By the time they get there, they've been buying their hell out of this. And the buyers are exhausted, ready to take a profit on their move. To take a profit on their move, what do they have to do? Become a seller. All the sellers here are going to be hitting the sell button as the buyers get there and go, right, made it. We'll start selling as well. And that's why we get market structure, because the momentum it takes to get back after a strong move like that, which is why mean reversion works, means you'll normally run out of buyers by the time you get there. So that's what I'll be looking for on that one. But you need some pound strength, or we need the yen basically to go completely flat and weak after having this little push, which is totally possible. We've obviously got the Eurozone news at 10 o'clock. That may well power up the pound if that is positive for euro. Unlikely. But there is a possibility. So that's all we've really got on our side today that could help us with that one. So not the best one to take, I don't think. I think probably Aussie yen is a better play. I think we got more chance of the Aussie powering up than we have the pound. But they're both equally extended and they're both putting in some pretty nice price action right now. So you could take your pick. New Zealand yen we've covered, or was that same thing's happening there, same as the Aussie yen, and US dollar yen. So US dollar yen, I like this a lot. Got too much yen on. This has come back down to where I was, not quite where I wanted it to come back down to, but it's a nice area to try a starter position back into this accumulation here. So we got this is where we pushed up to. We started to get tired, we pulled back, we came up, had another look at it. So again, this is what I mean about areas of balance, breaking out, come back, go back into balance, come back into balance. This is causing an area, a zone in the market where we are more than happy to transact, but we are not happy to break down below. We tried to, and the market went, nope, we like this long. This is the 135 area, funnily enough, the area that Kuroda said we'd be happy to devalue the yen to. It's not coincidence, it's all planned. That's what I'll be looking for. So, good looking area. If it does break down from here, we've got these lows to come and sweep for liquidity for anybody that's gone long. All these longs that I took here, yeah, and got out of. Bit of selling coming in, so a bit of a relax on those pushes we just had, pull back. We've also got obviously then these lows here where we obviously started to come down to and test and reject. So there's two levels here, 150 ADR, yeah, which coincides with the 24 moving average, and we've got these lows here. So entering here, you've got an opportunity to get into maybe, I'll probably only get into one more position down there. And then look for, if we're going to go range bound, getting out the highs. If you're trend bias like I am on this one, potentially breaking the highs, but obviously when you get out is down to your risk tolerance and your ability to hold a position. But looks good. Again, I'm overexposed now on the yen, so I can't really take this one. But we've got US dollar news this afternoon in the form of PMIs. So we've got a potential long catalyst this afternoon for the US dollar. It's forecast to be lower than expected. It's very mixed results with PMIs. But yeah, if it comes out as a positive, we will probably get a little bit of a push on the US dollar this afternoon. So this one's obviously already rejecting. So M5, you've just had that reversal alert there. Not particularly pretty one. It took a couple of attempts to get through it, but we got through. So looking good. M15, your reversal alert is just about to trigger in 5 minutes, assuming this candle closes bullish. So it looks good on that one as well. Hourly extension, obviously it's just starting to kick off and take off now. So 4 hours, you've got a few opportunities on the 4 hours as well. It's all the same stuff. Aussie dollar CAD is come back down. This is one I wouldn't want to take because I'm short biased on this based on Canadian dollar. If Aussie remains neutral to strong, I think CAD's just going to grind it out. So it's obviously moved a lot faster than expected. I was waiting for that pullback. Didn't get it, so missed it. But it's extended, so up to you if you want to take a mean reversion on this, but wait for this thing to slow down. The Aussie's really, really not happy at the minute. Pound yen. Extended to the downside, we just covered this one. So we're extended on the 4 hour, we're extended on the hour, we're extended on the M15. We've just had a reversal alert on M5. We just got a reversal alert starting to trigger on M15. Sorry, was it this one? No, it was the other one we're looking at. But anyway, pound yen. So yeah, it's all extended, but it is the weaker link. And the one that is obviously negative bias. The pound is a short at the moment, so probably going to take a little bit more to get it up, but it is extended across the board, so good looking opportunity for long. As I say, I like all of these yens long. I'm exposed on it, so you could literally take any of these, I think, and probably get a decent ADR move out of them, possibly even today. I don't think it's not unusual, is it? We see it over and over again. V-shaped recoveries. Or A-shaped recoveries, depending on which way it's pushed. So, just push, recover, pull, recover, pull, recover. So, not unusual, very common, in fact. So, manipulation. New Zealand dollar CAD, same thing. We've looked at this already. Very extended. We just come down into another extension. It's still pushing down. All these Aussies and New Zealanders are still not happy yet. So again, it's kind of the wrong bias for me. I want to be shorting this. I was shorting it up here. I'm waiting for pullbacks and we've missed it. So if you're taking this long, you are counter trend. Just be very careful with spacing. You kind of running up a hill with an escalator under your feet, so it's difficult. New Zealand dollar Swiss, don't get in the way. I mean, just don't get in the way of the Swissy at the minute. What's that? That's a daily level. Yeah, so this is this second low here. That first one we got the initial reaction and bounce from, which didn't hold. This is the second level. We are retesting that second level. Look out below if that breaks. Basically, there's nothing much. You got a level there with a triple bottom, which could potentially hold. So I've just seen I've TP'd on one order. So bear with me a sec. Which account is that? So I was just waiting to see if we get any. I want to see some strength coming through on that move. It's got a lot of sellers. I want to see some buying coming in. We're getting some fairly heavy selling. We might take this one off. No, it seems to be holding at the minute. I'll leave it. Just trying to get a gauge how many buyers there are versus sellers. Seems to be holding up positive at the minute, so looks okay. But anyway, I had two positions on that basically, and I've TP'd on one, $400. I don't really want to give 200 of it back, but I kind of want to see buyers stepping in. I'd rather just take a $100 loss on it than a full loss if it's going to dump, but there's no indication either way at the minute, so anyway, keep an eye on that. Just cross your fingers and hope for green. Not red. So this level here, this daily level, we've tapped into at ADR to the pip, pretty much within reason, and we've got the bounce. So if this holds, this New Zealand dollar Swiss, this is kind of the last chance saloon for this one, and I really don't. The way the Swiss franc is going at the moment, it doesn't seem to be letting up, and we've got currencies obviously devaluing against it as well, like New Zealand at the moment, which doesn't help. But the Swissy still seems to have the ability at the moment to put in these little runs for 4 hours, and nothing else has really got any strength. So all we're finding is we're just accumulating and stepping and accumulating and stepping, and it is so extended from the moving average. As I say, the elastic band theory, the more extended away you get from that moving average, the more it wants to ping back to it. It's always the same. It acts as a magnet, as do the propulsion gaps. We are so extended, but we are staying extended, which is what we call a squeeze. And it's not really giving up. So until this Swissy shows me some signs of weakness, I don't want to really get in for a mean reversion. I want to see the Swissy come back to the 24. Then I will start to take shorts on it, because I know that the Swissy's got the opportunity to power up and to devalue, which is what it's always done. The problem we've got obviously is at the moment with these new NATO members joining, the Swissy could well get hammered if anything escalates in the Ukraine war, or special military operation. So just a bit worried about longing it. It's a mean reversion heaven technically, but fundamentally it's not. Damn, just got stopped out on that full whack. Give half of it back, never mind. New Zealand dollar yen, same we've looked at, 4 hour extension. That's a hell of a drop, so be prepared for more, down to potentially 175. As I say, if we get to 175, that's a beautiful support resistance zone. Be looking for a lovely long. It looks like it's starting to play out already though, so this is the one we look at, wasn't it, for right now basically. If not, second entry, roughly half an ADR down, so it's 100 ADR pair. 175 ADR is 55 pips away. Now you're going to push, aren't you? Okay, so that's it on 4 hours. Morning, Trevor. ES bouncing off of a VWAP. Yeah, I don't pay too much attention to VWAP in Globex. It's a lot more usable, I think, in the New York session. But yeah, it's hovering around there. Just waiting for this DAX to basically make its mind up. As I say, we've got, it's done it. There we go. Okay, so there's your gap. So the question is, Can we get a 125 ADR today? It's going to be hard work, but could get there. So yeah, markets opened obviously very bullish this morning. We've done the gap fill. That was a nice easy trade, that was. Just a shame I took that second loss on it, but never mind. We are still pushing though at the minute, so I'll be looking for pullback and continuation longs on it potentially, as the market tries to regain this ground here. But it's a tricky one this morning. When you get this gap fill, we quite often see the market sort of just hover and then carry on its merry way. Obviously, we are bearish, all indices. And crypto, I shouldn't laugh. Excuse me. Yeah, the poor old cryptos. They had a little bit of, overnight, had a little bit of a shining light come in. Obviously, you can see when you start looking at things like this, looking at crypto, and you realise how interlinked all of these markets are. Huge push on that. At the same time, Aussie, New Zealand, yen, all happens at the same time. Yeah, all these markets are all interlinked, especially the crypto market now is so interlinked with the indices. You've got an audio lag, Trevor. You might want to restart or refresh. Yeah, so big move up on crypto, and equally completely undone it in 3 hours, pretty much. So we'll see if that holds. But yeah, this is everybody trying to hold this 20,000 level. It's a psychological level where we've got a lot of people buying crypto because they're like, oh, hang on a minute, we were up at 40. It's going to go back up to 40, or say it's not the all-time high, but this is where we came back down to, and everyone was like, ooh, 40, ooh, 20, ooh, 60. Seems to be moving in 20s, doesn't it? Next stop, ooh, 0. So everyone's trying to buy it up here, but do you really want to be buying something that's doing that? It's a hell of a gamble. That's a hell of a falling knife, isn't it? In something that has no fundamentals behind it. Don't know. Just doesn't sit right with me. But 30 level is where we accumulated last. So if it is going to go long, I'd be really worried about it bouncing back at 30. But we'll see. Indices have got plenty of room. Yeah, so we got loads of room back down to the COVID bounce on the US indices, and as Bitcoin is pretty much mimicking the US indices, it's getting pretty much there on the Dow. I just think this thing's got further to go, back down to at least 15, if not 10. I'm not involved, so just my opinion, which means nothing because I don't trade it. Anyway, so that's it really for this morning. There's nothing much else to look at the minute, apart from everything that's got massively obviously extended today. So lots of opportunities all over the place on these. As I said, I don't think these are proper positions. I think these are more manipulations. They may well continue to manipulate further and get a little bit more of a push on them, but they will all pull back at some point. New Zealand dollar yen's now 150. It was a 150. Looks lovely for a pullback. So keep your eyes on those. I'm overloaded on the Aussie, which is not a massive problem, but I took the EA stupidly. I took 2 positions by accident on that one, so that's why I'm in the drawdown that I'm in at the minute. But I shall look to bank some if we get some pushes today. As I say, 10 o'clock in an hour and 10 minutes time, you want to be paying attention to your euros. We've got the euro figures coming out for CPI, and then PMIs this afternoon on the US dollar. So euro US dollar is probably going to be the most volatile today. Fingers crossed we get negative euro and positive US news, and that will suit me just fine. I haven't got TP on this actually, have I? I'm just going to initially go for these lows on the 4 hour from a couple of weeks ago. Ties in nicely with that low and 125 ADR. So negative euro news, positive US news today. Could easily do a 125 ADR on this, so it could be out of this one this afternoon, which will be 0.5%. That's it. So yeah, so there's my exposure at the moment. So Monday, I will come on Monday. I'll be here Monday morning, 7:50 usual time, and I will see basically how we get on. I'm not going to be trading futures on Monday at all, but the market's likely to be quiet on Monday because New York's shut, so none of the US traders will be there. Everyone will be fairly flat as much as they can today. So we'll still get some movement, but we will have a lot less volatility in the afternoon. A lot less liquidity in the afternoon, and that will lead to one of two things: massive slippage, massive movements, because there's not enough liquidity in the market to execute the orders for London, or London will basically just sit on its hands and not do a lot because nothing's happening in New York, and we'll get a flat day. So you never know until the day what it's going to do. It's either hugely volatile or flat as a pancake. At the moment, with the way the market's been over the last week, I suspect we'll probably have it fairly flat, because we've got quite a lot of sideways action and the odd push. So German S&P manufacturing PMIs have just come in as expected. So nothing particularly interesting there. French, Italian, it's all on the decline at the minute. Manufacturing. Right, that's it. Anybody needs anything, I'll be in the Telegram group. I'm a few people have been asking about futures stuff again. I might start a separate futures thing, because they're completely different beasts, and I don't really want to mix them all up together. So I might think about starting maybe another Telegram channel for dedicated to futures, and I'll probably do a few recordings of trading sessions with futures as well. It's just, I think they last all day basically, so I need to record it all and then kind of cut it together, because there'll be a lot of sitting around doing nothing, waiting for stuff to happen. So Diamond, for the EA account that you've left running, is that H1M5? Yeah, it's H1M5. It's that one. Hasn't taken any. It's just not. It doesn't trade often. It's doing very nicely, but it doesn't trade very often because it's set up with 80/20. So, oh no, sorry, 75/25 hourly. So you got to get stuff pretty well extended on the hourly, and obviously it's only running on set pairs. So if the pairs that get extended are not the ones that I've got the A running on, then it doesn't happen. Yens, so like Swiss yen, I'm not running many yen pairs. Yeah, that's it. All I've got for you today. Was up late last night watching jigsaw videos. Yeah. Say goodbye to the next couple of weeks. They're long as well, the jigsaw stuff. He's really good, Peter, but he's it's all theory. It's all theory. So it's quite heavy going. And then the key to it is drilling. Is literally the most important thing. Is just take some trades. Spend 2 hours in a demo account, hitting the buttons, taking trades, see what happens afterwards. Look for things that, when you take a trade, what happens to this after I've got in when I win? What happens to this after I've got in when I lose? All that sort of stuff. So yeah, it's a learning curve. One of his videos, I can't remember which one it is. It basically talks about why you cannot trade a system, somebody else's system, and this is kind of what I allude to as well. Is you can teach somebody what an indicator does. You can teach somebody a condition. You can teach somebody the difference between two different time frames. But if those indicators, those conditions, or those time frames don't suit that person, they will never make it as a trader with those tools. And it's exactly the same with this. There's a lot of moving parts in Jigsaw. There's a lot of things to look at. And you will find that you will either gel with the ladder or you won't. You will gel with the heat map or you won't. You will gel with reconstructed tape or power meters or you won't. You'll gel with cumulative delta or swing charts or you won't. The only way you will find what makes sense to you in this is to look at it all and use it all and figure out which bits work and which bits don't. And there is no other way of doing it. He says in some of his videos, he, being in this industry, 80% of his customers are prop firm traders. They all use ladder and DOM. They don't use charts. So he gets to talk to a lot of prop firm traders. The most successful traders he knows, none of them have got anything in common system-wise at all. They will all hit the button at completely different times with completely different things in mind, but they will all be paying attention to one thing: order flow, right? Everybody's selling at the minute. Yeah. What do I want to be doing? Selling. Is the market at the moment pushing up? Yeah. What do I want to be doing? Buying. The only thing they have in common is they pay attention to what the market is telling them, but how they take trades is all completely different. And this is why drilling is so important. Just get in and out of the market. And there's loads of different sort of drills you can do. I've developed some of my own drills that I do, or I have been doing over quite a while, and just doing them. And just being in the market is more important than studying theory. Because this is really easy when you're trying to scalp 8 or 16 ticks out the market or 4 ticks out the market. There are certain times when you want to be in a direction and not in another direction. At the moment, I do not want to be hitting the buy button. Last thing in my mind is going long now. Why? Because everybody's selling in high quantities. The market is moving down, and this thing's flashing red at me. Do I want to be a seller here? Not necessarily either. I don't want to be a seller either, because at the moment we've got a massive great volume cluster here which is likely to act as a support. So I don't want to be a buyer because everybody's selling. I don't really want to be a seller because we're hitting here. Now if I see a load of buyers come in and this thing flick green, I'm thinking, yeah, this is a good support bounce and we've got light liquidity to fly through. Do I want to be a buyer? Yes. But right now I don't want to be anything, so I'm sitting here on my hands. But the way you'll learn that is by constantly being in the market long or short. And you'll suddenly go, well, every time I hit the short button when we hit one of these clusters, it doesn't get through it. And it's just things like that which will twig in your head. Or you'll see cumulative delta dropping and you'll hit the short button because cumulative delta's dropped, and then every time you do that you lose, or it comes back and hits your stop, or whatever. Something will happen every time you do that thing, and your brain will just suddenly go, well, that's not right. So every time you see that condition in the future, you won't do it again. But because you're trading no time frame, you'll learn this all within hours and days, rather than waiting for a reverse alert on M15, which might happen on that pair once every 3 weeks. Yeah. I'll be in 30 trades a day, and that's the big difference, which is why everyone's attracted to futures. The learning curve is very, very fast, but with that comes a lot of getting it wrong. You'll get it wrong all the time. And that's what they say about doing drills. You keep doing drills until you see no more improvement. If you see no more improvement, that drill's taught you everything you need to know. If that drill didn't make you find a trade strategy that gels with you, that's fine. Let's move on to the next drills. Let's try something different. And you just keep trying stuff. For me, it's the breakouts. I love breakouts. Breakouts into thin volume is my favourite setup. I'm going to put one in now. Yeah. I love these. Yeah. This is a high. Yeah. After this, we've got no orders. So the pop, as I call it, it'll pop through. But I've got to wait. I've got to wait for it to get here. And it may or may not work. But if it does work, it's going to pop. And we're running into light liquidity up at the highs as well. It's just, that's my favourite type of trade. Other people love rotation trades. They will sell it here and they'll buy it here, and they'll sell it here and they'll buy it here and they'll sell it here, and they'll keep doing that all day long. I can't do it. I've tried it. I've drilled it. I can't do it. It drives me up the wall. Because I sell here, it moves down there, and then it comes back here. And then it tries to drill that for a bit, and then it does that for a bit, and I'm sitting in this thing and it's not going anywhere. It just drives me up the wall. It's just not for me, but it might be for you. So do it, drill it, see if it works. Can you only drill with live data? Yeah, you can only, yeah, really. You want to be doing it with live data. You can, if you go with Tradeovate, you can do the market replay thing, but the problem with the market replay thing is you won't get the queue, yeah? So I'm now 32 in the queue to go long. If you're drilling with market data, you don't get that live data. You don't get that thing. I might not get filled, especially in high liquidity, if I'm sitting on 300, 500 contracts in position 499. In market replay, I'll get filled the second it hits that. In real life, I won't get hit. I won't get filled. So it's not. It's better to use it in real time, I think. And you want to be doing it at times you're going to trade as well. So don't do drills in the Globex session if you can't trade the Globex session. Don't do drills at the Frankfurt Open if you can't trade the Frankfurt Open. Yeah? Drill when you can, or practice, whatever you want to call it, when you can trade. You need to sit through 5 or 10 New York Opens to experience New York Open. And then you'll suddenly go, and this is where the other bit of this software comes in, Journalytics. Your Journalytics, which is their reporting analytics program, will tell you trade between 2:30 and 2:45 every day between 2:30 and 2:45, you lose $300 on average. Yeah, that is gold. Do I want to be trading between 2:30 and 2:45? No, because every day I do it and I lose, so I don't do it. Wait for the market to settle. If your Journalytics tells you that between 2:30 and 2:45 every day you make 80% of your profit, do it, because your strategy is going to be different. And this is what I mean. You can't teach somebody discretionary trading. It's just not possible. Everybody's got to do it themselves and just figure out what works. Just take everything from everybody and try everything. But that's what I've said in the bootcamp. And it's the same with indicators. what I do may not work, but if you take something of mine that makes sense and go and then take 3 other people's information and put those bits together, that's exactly what I did. That's how I came up with the strategy I've got. I've stolen bits from lots of different people, put it all together, and it works for me. It's exactly the same with this. There's not one strategy that works. Yeah, front running this guy down here with the big contracts is probably a good long for a lot of people, because they'll be thinking, we're not going to go for a run of the lows, we're going to rotate back up to here, and that's a valid trade. No idea if it'll work or not. Worked last time, rotated up, now we're rotating down. That's the pre-Frankfurt open low, and that is yesterday's New York low down here. So there's 2 strong areas of support backing me up on that rotation. But like I say, this is why rotation trading for me doesn't work. I find I get in and it never gets to me and it drives me up the wall. Look, this thing is now going to rotate all the way back up to there for a 16 tick move, and I'm missing it because it didn't get to me. And then I'll short it up there and it'll go like that out the top. You can't see this, can you, because I'm off the screen, but try it. Try everything. 2 sessions a day is all you need. 2 1.5 hour sessions a day for a week. By the end of that time, you'll know what makes sense and what doesn't. You just got to take a week out, maybe 2 weeks. Prop firms will get you to do this for 4 to 6 weeks. You won't even be allowed to trade. You just have to watch the ladder for 4 to 6 weeks, nothing else. By the end of that 4 to 6 weeks, you'll be so in tune with the market, you won't hit the button until you've got that set up. Trevor, haven't tried it yet, waiting to finish my top step free trial with TS Trader, but we'll probably join. Yeah. If you want to do it, do it. It's just, it's futures. It's different. Totally different to Forex. Chalk and cheese. Completely different animals. Well, it's exactly the same animal. It's just a completely different way of looking at the market. Yeah, I was toying with the idea of taking... I'd much rather take that than what I was about to take there. Just saw it's buying, this market's buying up, but I'm looking at the minute, we pushed down on 6,500 contracts. After that push up, 4,000 lower, higher, lower. I'm looking for possibly a flush out the lows. But I don't know, so I'm not taking anything. Euro odd weekly range. We know about that already. Okay, so I'll leave it there. I'll update you in the Telegram group if I close anything out. Hurry up and join me so I can get more help figuring it out. Is that you? Yeah, join forces if you want in Telegram. Help each other out with this. There's no secrets. And that's another thing, just before I go. This industry is full of people that sell you the Lamborghini and the big house. And as you know, I don't have a Lamborghini and a big house. I'm just a guy that trades. In the futures industry, there's no one selling you a Lamborghini. Futures traders trade for a living, and that's their job type thing. Forex traders, like myself as well, I trade for a living, but you will never make as much money out of Forex than you will out of futures, and that's where everybody sees the shiny diamond and goes for it. But you will find in futures, there's nobody giving away a secret formula. Every futures course out there you will see, and every course I've taken for free or paid for on futures has never given me a strategy. There's no secrets. There's no secret sauce to it. The market moves in the way the market moves. All you get taught in futures is this is how the market moves. These are the conditions you want to look for, but there is no when this does that, do this in futures. In FX, there is when this alert comes in, if this is lined up with that and that, do that. There's confluences. Because you are trading time frames, you're always trading time frames. In futures, there's no such thing as a time frame. There is no time frame. This is the market. This is live. That's it. There's no time frame here at all. The market is moving up and down. So it's a totally different concept, and this is all you'll get taught, is how and why the market moves, what is likely to be happening under the hood when certain conditions you see appear. There's a load of people selling here. Are they selling because they want to go short, or are they exiting their long positions? We don't know, but that's what you'll get taught. That's the mindset. The mindset shifts into what could possibly be happening rather than is this a good setup? It's a totally different thing. So yeah, don't expect to take any course, free or otherwise, with Jigsaw and get a set of conditions where this does that, do this. Doesn't exist. And every futures trader will show you how they trade and what they do. None of them will do the same thing, but they will all get in and out of the market with a risk reward. And you know, this is the thing with this. If I can scalp 16 ticks out the market 3 times a day without having a loss, that's $1,200. I'm done. That's all you need. So you will train yourself to get these good ones, like this one that's setting up now. Market's buying a lot. We're approaching this level. I'm looking for a pop. If it pops, I'm going to make $400. If it doesn't and it hovers and gets stuck and pulls back, I probably won't take the whole $200 loss on it. I'll probably take 100, because what I know and what I've seen is this either goes pop and it flies out those highs and it just goes fast, or it gets stuck and we reject, and then we go into a range trade. And if everybody starts coming in short, I'll join them short, because we're probably going to reject and go back down again. After you've seen this for a few times, you know, and this is why I do take this one. If I can do this 3 times a day, I'm done. That's the beauty of it. Yeah. You can't do that in Forex, can you? You can't take one trade and be done for the day. Well, you can, but you don't, because everybody's focused on 28 Forex pairs, X number of indices. If you're in crypto and stocks, X thousand instruments. You see, you have setups bombarded at you day in, day out. Futures, every futures trader that makes money, you will see on YouTube, they trade one instrument, and that's it. I trade the ES. That's it. Other guys, there's a guy that streams every day. He trades NASDAQ, nothing else. You learn one thing and you trade one thing. And again, don't get stuck on ES. Yeah, if you find treasuries are for you, trade treasuries. They're slow as hell. They'll move 20 ticks in a day. But if that's what you can trade and clicks with you, do that. And part of that Jigsaw course, first thing you do in the Jigsaw course is he says open up 5 or 10 ladders, or 3 or 4 ladders, or however many ladders you want, and first couple of days do nothing but study those ladders. Watch them go up and down. Some of them will go at 7,000 miles an hour. Some of them will be like a snail. Which of them speaks to you? If the one that goes like a snail speaks to you, you trade that one. And you can trade treasuries markets for 2 ticks a day and still make $1,000. But with ES, you're going to be looking for, 5-10 points a day. Different, totally different. But if you trade the ES and you can't make money out of the ES, doesn't mean you can't do it. You're just trading the wrong instrument, because this thing doesn't talk to you. It doesn't work. It's too fast. NASDAQ, I can't trade this thing. NASDAQ. Look at it. Look how far it's gone already in today. Can't trade that. It's an it just flies up and down. This thing, when the market opens, this thing is jumping like a frog. I literally can't keep up with it. I don't trade it. I can't keep up with it. Loads of people trade this. I have no idea how they do it. I can't do it. So I don't do it. You've got to pick the one that works for you. You might find the Russell. Russell's a bit slower. You might find the Russell is your baby. Russell's not gone anywhere near as far as the Nasdaq today, is it? Look, that's all it's done. Much, much slower. Slower than the ES. So it's an in-between. So you've got to try all of this. But you'll know very quickly. If you watch all of these for 2 or 3 days, you'll know that the Russell bores you to death. You're either one type of trader or another, aren't you? You're either an adrenaline junkie and you need to be in and out the market all the time, in which case then you want to be trading fast stuff, or you're a slow, methodical, can concentrate for 2 hours type person, in which case you just want to scale a couple of ticks out of the treasuries market a day. Yeah, but you're going to get in with 10 contracts, not one. And you're going to look for 2 ticks and make $500. Yeah, but you won't know that until you've tried them. So, just a little tip. Yeah, because in the Jigsaw course specifically, Peter talks about the ES all the time. But that's because he trades the ES. And I like the ES. A lot of people like it because it's an intermediate. It's a fairly nice mover. It's a fast mover. It doesn't go too fast. Doesn't go too slow. It suits a lot of people, but a lot of people won't get on with it. So you just got to try these things. Anyway, enough futures. Like I said, I want to do a separate futures thing because it's a different thing. So I'm just going to try and trade this breakout. I was hoping this was going to go while I was talking, but it hasn't. We're stalling, which again is not a great sign. I just want to see if we get the pop on it or not. Whoops. Right there. Jesse, by the way, on the TopStep website there is a list of supported platforms. No, so with TopStep you use Rhythmic. Sorry, no, with TopStep you use Tradeovate, not Rhythmic, sorry. With Apex you use Rhythmic, with TopStep you use Tradeovate. Tradeovate is a supported platform for Jigsaw. And that's what TopStep uses. TS Trader is Tradeovate. Okay, we're just tapping. Still got a fair bit of selling coming in. We are buy heavy. There we go. Bit of a slow pop that. There we go. Okay, taking 187 off that. Big order came in there. Don't know if you can see that. Just about 150 short, spread across small orders, which has obviously stalled that push. But the play now is to buy back down at the high of that breakout. So we're looking, if we get back down to here, I'll go long again. But we've got this to get over as well. So this may well act as a resistance. So I'm just waiting to see who comes in. This is still buying, a lot of buying. But you see, this is what I'm talking about. This is what I have found works for me and what I like. I like taking trades into these thin areas of the market, because I know that if my order gets triggered at thin areas, I know we get a pop, and we can usually get a good 16 tick pop, which is a $200 pop. If we break it and we don't get that pop, and within a couple of minutes we haven't made that move, normally we will get stuck and we will drop. And if I don't see buyers coming in supporting me on the tape and in executed orders, I want to get out of that order and take a little bit of a loss on it, which is fine. It's better to take that than take a 200 loss. It either works or it doesn't, and it works quick. And this is why I like them, because I can see within minutes if I'm in or out. But that's because I'm happy to be patient. If you're an adrenaline junkie, this is probably only the second opportunity all morning we've had in a couple of hours. So you know, you need to try this and see if you've got the patience to sit there and wait for those. And now I'm waiting patiently to see if it gets back down to there. But I'm not going to get in with a limit order here. You could, and again, something you will try. I'll drill getting in with a limit order down there with a 16 tick stop on it, and I'll see how many times these work, and if they work, how quickly they work, and I'll find out what goes on. But I prefer to wait for this to come down here. Personally, I want to see it hit this rotation and get stuck, and then I want to see some buy orders come in, and then I will get in. I'll wait for confirmation that, yeah, this breakout is going to hold down here. But I'm also, if it doesn't get down to here, I'm going to miss that trade. If this flies now, it's going to fly without me. And there's nothing I can do about that. I'm not going to jump on it. But again, I have had days where as soon as I see some orders coming in here, I like to reset this so I can see what the balance is. As soon as I see some orders coming in, some decent buying coming in here, I've had days where I've just hit that button, made another 200, waited for a little bit of a pullback, reset it, wait for some buyers to come in, hit that button again, made another 200. Yesterday was like that. I showed you the P&L yesterday. I just was banking $200 every 5 or 10 minutes yesterday. I had an awesome afternoon. But it was a trend afternoon. This could turn into a trend Globex session for all I know. Sometimes that works. Sometimes you get absolutely killed. Trevor, oh no, I think I'm an adrenaline junkie. Yeah, and that's what drills. The best drill you can do is the always in drill, or I think he calls it a cut and reverse. I'm just going to switch over to a sim account. The cut and reverse is I'm long, yeah, and I'm going to now get in with 2 contracts every time. So I'm long 1 contract. I just need to close that off. Oh, hang on, just get rid of that stop. So you're in the market, and your job basically is to stay in the market. Trevor Lamb, embrace your inner junkiness. So your job is to stay in the market. So I'm in long, and I'm going to get the other way when I think I should get the other way. So right now I'm thinking if we break down below there, I'm probably going to reverse and go short. If we break up to those highs, I'll probably reverse up here. I'll probably reverse and go short up there. But you get in and you stay in until the market tells you to get out. So as long as this keeps flashing green, as long as we got buyers supporting me down here, which I'm just going to reset, and I'm seeing decent order volume coming in, I'm seeing the Nasdaq going up, I'm going to stay long. But if this thing starts to come down, I'm going to basically hit the other side and go short with 2 contracts, which means I'm exiting my long and going short with 1 contract. And you just keep getting in with 2 contracts constantly, and you're in the market all the time. The idea is to get a break-even P&L. When you've got a break-even P&L, it means you were right 50% of the time. But what you're going to teach yourself is, should I be hitting the sell button at the top of these clusters or not? Should I be waiting for it to break through these clusters at the top? What conditions happen when these clusters break and when these clusters fail? What's showing up over here when the market turns around? And by being in here for an hour and a half, just hitting the buy and the sell button, it's not about making money. It's about being in the market. And it's the same thing as training. You are training. If you want to do this as a job, you've got to train. You can't just do a course and be amazing. If you want to be a car mechanic, you can do a course on how to change an exhaust system. There's a book which will teach you how to change an exhaust system. Unfortunately, though, there's about 1,000 different exhaust systems on 1,000 different cars. So the next one that comes in is going to have a completely different exhaust system. They may all work the same way, do the same job, but they all look different, have got bolts in different places, and are made of different number of parts. There is no one exhaust system for every car. There is no one trade for every trader. Being in here and changing the exhausts for an hour and a half a day, if you like, i.e. hitting the buy and the sell button for an hour and a half a day, will show you what happens in all these different scenarios that come up over and over and over again. And again, it's the same as I say with Forex trading. You need chart time. This is why I don't believe in filtering out alerts. You want to be bombarded with as many alerts as you can, because every alert makes you look at a chart. Every time you look at a chart, you're building muscle memory into candlestick patterns. You have to have a muscle memory, because then I open a chart up and I've got an alert and I look at it and go, that doesn't look good, because the last 1,000 times my brain saw it, it didn't work. I'm not going to get interested in that trade. You just got to do the same thing in here. And the way you do it is by being in the market and then getting out of the market when you think it should go the other way. And if you go into the wrong way on it, then you'll go, oh, I'm wrong, I'll go the other way. And then if you're going wrong all the time, you keep going wrong until suddenly you start getting it right. So, and then you can turn it into making profit. So I can now hit this button here and make $75. But do I think it's going to turn around now? Should I take this $75? Because if I take this $75, I'm now short. Do I want to be short? Because if I'm long bias, I'm now going to go into drawdown. No, I don't. So I'm going to go long again. But that's cost me $12.50. But I'm not looking at profit. I'm looking at being on the blue side of the market or the red side of the market. I'm looking for try and think, where's this going? That's what you got to do. You got to think, where are we going now, right now? There's a big buy order just come in, although there's more sellers than there is buyers, and we're in the middle of this. And you'll suddenly realise when you take that trade, like I did there, there's a reason that's a really, really, really bad trade. The reason is because we're right in the middle of that volume cluster. It's a range. You take trades at the range extremes. You either go long if you think we're range bound. Long there if you think we're range bound, and short there if you think we're range bound. Or you go short there if you think we're going to do a breakout, and long there if you think we're going to do a breakout. But never trade in the middle of a cluster. That's just stupid. But you don't know that because you've never done this. You haven't done this 100 times. It's things like that that it will teach you. Drills, just building muscle memory. But you'll do this thing, you'll do that for 3 or 4 days, and like me, you may well come to the conclusion that that does your head in. Every time we get to one of these, I think, ugh. All I want you to do is pop out the top of that. I don't want to try and sell it there and buy it there. That does my head in. Drives me up the wall. But if you're an adrenaline junkie and you want to be in the market, if you can't sit here not being in the market, that's a really good setup, because you will always find one of these opportunities. Yeah. To trade this up to there and get out up there and then get down. There's just got to do it. Anyway, that was a demo account, by the way. Right, I'll leave it there. Again, keep waffling. The doctor's going to be phoning me in a minute, so I've got to go. 125 ADR Aussie Swiss. Again, don't get in the way of the Aussie Swiss. I wouldn't, unless you're going to mean revert and be very tight with a stop loss on that one if you want to take it. But we are holding here, look. It's good support. But bias is like that at the minute. When those big contracts show up on your window, do you look at how far from price they are? Like, for example, the big buy order you just mentioned is quite some ticks away from your current price. I look for when they appear. What I want to see personally, and you'll figure this out for yourself, but what I like to see is when I hit the button, so I can reset this to 0 and reset all that to 0. What I want to see when I hit the buy button is this more blue than red, and I want to see some of these guys jumping on board with me. So I'm watching this for two reasons. Yesterday I was watching this and I posted in the Telegram group, didn't I? I said, look at that. There was I don't know how many it was. There was over 1,000 contracts landed at the same price at the same time, and I said someone big has just entered the market long. A huge player has just stepped in. From that moment on, I was long. So I used this to tell me when the big boys are entering. And then when I'm in a trade, I use this to back my trade up. So if I get into a trade and this thing and I'm long, and this thing lights up red, that's a massive warning sign. So I'm long in the market, and there's so many people now selling. It doesn't mean my trade isn't going to work, because these guys might be selling because they're getting out of positions that are wrong. I don't know. You don't know why these orders have been executed. All you can see is orders. You don't know if this guy's just puked and lost 66 contracts, or whether he's got out because he's made 66 contracts, or whether that is his initial starting position and in a minute he's going to have to exit 66 contracts. You've no clue. No one has. All we can see is what is happening. But at the end of the day, if there's way more buyers than sellers, usually you want to be going long. How long it's going to last, you've no idea. And this is where you will see movement in the market, and you will get to realize how deep the pullbacks are, how big the pushes are, how big the pullbacks are. What happens when we get to the same level again and there's a big red bubble appears? You got to see it for yourself. Some people don't use this at all. Some people don't use the power meters at all. Some people just literally trade off of this and nothing else. Some people don't use the heat map. Which is why I say you've got to look at it all, figure out what works and what doesn't. Some of it will, some of it won't. If it's important to you that this happens close to your price, brilliant. If it's not, don't. But you just do it. Just be in there and do it. As I say, it's a practice thing. It's a drill thing. You've got to repeat the process to figure out if you like it. It's like going to any class. If you went and took Spanish lessons, you'd never spoken Spanish in your life. If you went to Spanish lessons and on the third lesson you were like, I find this complicated, hideous, and I hate it, you'll stop doing Spanish lessons. Doesn't mean you shouldn't take French lessons. You might go to your first French lesson and think, this is the best language in the world, and you'll become a French translator. Until you've been in here and tried Spanish and French and everything else, you won't know whether you like rotating those, taking breakouts. You won't know whether you want to pay attention to tick strike if you've got it, whether you want to pay attention to this, that and the other. You just got to try it for a bit. Some of it will speak to you, some of it will confuse the hell out of you. If it confuses the hell out of you, turn it off. Right, that's it for the day. I've got to go. Doctor's going to phone. Come to the Telegram if you need anything, and I will obviously be in there all day. I'll try and get a video done today if I can on the future stuff, and I'll think about doing a new channel for any of those interested in Telegram. We can just have our own little bit. We can talk about future stuff. And obviously I'm happy to do future sessions, but I do find I trade so much better when I'm not doing it live. I don't know why. It's just a thing. I think there's that subconscious pressure on you. So I'd rather not do live sessions if possible. I'm happy to record me trading and talk over it. But you should do that yourself anyway. Record your sessions and then play them back to yourself, and then you'll look at yourself and go, what? And the other thing there is you're getting twice as much exposure to the market. If you trade it and then watch it back for an hour and a half after you've traded it for an hour and a half, you've got 3 hours in the market. Good thing to do. Okay, so I'll keep you updated on this in the Telegram group. We'll see where everything goes today. I'm not going to take anything new, I don't think, today. I'm exposed pretty much as far as I want to be at the moment. Be aware of the 10 o'clock news in 20 minutes. And be aware of 3 o'clock PMIs. So keep your eyes on your euros and keep your eyes on US dollars today. I'm going to get some decent movement on those. All right. Have a good weekend. If you're off on Monday because it's 4th of July, have a good 4th of July. And I will see you next week. Have a good one.